Japan loves one word more than innovation, more than diversity, more than even salary increase. That word is fair. Fair hiring, fair promotion, fair workloads, fair treatment of women. Say it enough times, put it in enough glossy HR PDFs, and apparently it becomes reality. Or at least that's the theory. In practice, Japan's corporate ladder is less equal opportunity and more decorative staircase inside a museum where only executives are allowed upstairs. This is the silent world of the salarywoman, not the cheerful TV commercial version, not the office lady with a smile and a planner fantasy. The real one. The one carrying Japan's corporate machinery while being told she's lucky to be allowed inside the building. Let's start with the basic lie. Lie number 1. Same job, same pay, same opportunity. On paper, Japanese companies adore equality. Job descriptions look identical, titles look neutral, salary bands look clean and mathematical, like finance models that conveniently ignore reality. In reality, women are quietly filtered into roles with limited upside. They are placed where overtime is expected but not recorded. Responsibility exists, but authority does not. Performance is praised verbally, but never priced into compensation. Meanwhile, the men above them are learning the real game, how equity compensation works, how company stock buybacks inflate executive bonuses, how internal reserves are hoarded instead of distributed as wages, how corporate real estate quietly appreciates while employees are told to be patient. Japan's stock market looks fantastic on Bloomberg. Japan's balance sheets look pristine. Japan's corporate cash reserves are at historic highs. And yet the salarywoman is told there's no budget for a raise. Interesting math. The financial shell game nobody talks about. Here's where it gets uncomfortable, so pay attention. Japanese corporations are not poor, they are cash rich. They sit on internal reserves large enough to make real estate developers jealous. They invest in overseas assets, foreign bonds, commercial property, and yes, stocks. Who benefits from that? Shareholders, executives, institutional investors, pension funds tied to senior management. Who does not? The salarywoman staying late without paid overtime. The woman whose bonus is adjusted for being less flexible. The employee whose productivity funds asset growth she will never touch. Japan is not underpaying workers because it can't afford them. Japan is underpaying workers because capital prefers silence, and salarywomen are taught to be very, very quiet. Unpaid overtime, Japan's favorite invisible asset. In finance, unpaid labor is the best return on investment imaginable. Zero cost, infinite extraction. For salarywomen, unpaid overtime is disguised as team spirit, professional responsibility, not wanting to stand out. We all do it here. For management, it's margin expansion. Every unpaid hour improves profit ratios. Every silent evening boosts internal reserves. Every exhausted woman props up Japan's stock charts. This is not culture. This is financial engineering using human fatigue. The gendered risk nobody prices in here's something Japanese companies love to ignore. Risk. Women carry hidden risks corporations never insure against. Career penalties for pregnancy, promotion delays disguised as timing, informal exclusion from high-impact projects, harassment framed as misunderstanding. And when those risks materialize, the company doesn't pay. The woman does. Meanwhile, executives hedge everything. Currency risk, interest rate risk, real estate exposure, equity volatility. But women's careers remain unhedged, uninsured, unsupported. That's not tradition. That's exploitation with better branding. Why this matters to you? Watching this video. If you think this is just social commentary, congratulations, you missed the money. This system explains why Japanese stocks rise while wages stagnate, why real estate prices detach from salaries, why consumption weakens, why women exit the workforce quietly, why Japan's economy looks stable but feels hollow. This isn't just about fairness, it's about where the money goes. And spoiler, it's not going to the people doing the work. If you're still watching, you already know this channel isn't here to comfort you. It's here to explain what Japan politely hides. Like the video if you're tired of corporate fairy tales. Subscribe if you want the financial truth behind Japan's harmonious workplace. And keep watching, because in Chapter 2, we talk about promotion traps, fake leadership tracks, and why waiting your turn is the most expensive lie salary women are ever sold. Japanese companies love promotions the way luxury brands love window displays. They look impressive. They suggest progress. They are mostly decorative. For salary women, promotion is not a ladder. It's a waiting room with no clock, no windows, and one recurring sentence. You're doing great, just not yet. The eternal potential trap. Male employees are evaluated on trajectory. Female employees are evaluated on perfection. A man can be promoted because he shows promise. A woman must prove she is already flawless, indefinitely, without making anyone uncomfortable. For men, mistakes are learning experiences. Aggression is leadership. Confidence is vision. For women, mistakes are lack of readiness. Assertiveness is difficult. Confidence is tone issues. This isn't bias. It's worse. It's institutional delay. Delay costs nothing. Delay preserves hierarchy. Delay protects existing capital structures. Fake management tracks and the illusion of advancement. Japanese companies quietly run two promotion systems. Track A, real leadership decision authority, budget control, equity-linked bonuses, overseas assignments, exposure to M&A, investments, strategic planning. Track B, salary woman management team coordination without authority, responsibility without budget, meetings without outcomes, assistant manager, titles that manage nothing, zero exposure to capital allocation. Guess which track women are gently guided into? They're told it's balanced. They're told it's appropriate. They're told it's safer. Translation: you will manage people, not money. You will carry stress, not equity. You will burn time, not accumulate assets. Why capital loves this arrangement? From a financial perspective, this system is brilliant. Cynical, but brilliant. Salary women absorb operational stress, prevent conflict, maintain team stability, reduce turnover costs, handle emotional labor management, refuses to do executives, focus on asset growth, protect stock performance, optimize real estate portfolios, preserve internal reserves, extract bonuses tied to financial metrics, not morale. Japan's companies aren't inefficient. They are efficiently unfair. The unspoken rule: don't compete with men who invest. Here's a secret nobody says out loud. Many male managers don't survive on salary alone. They own property bought decades ago, invest in stocks funded by family capital, receive quiet parental support, benefit from intergenerational asset transfers. Salary women rarely have that cushion. So when promotions are delayed, women fall behind financially, not just professionally. No equity exposure, no real estate accumulation, no capital compounding, no safety net time works against them, while capital works for management. This is how inequality compounds without ever appearing in payroll data. Why be patient is a financial sentence. Every year a promotion is delayed. Inflation eats purchasing power. Real estate prices move further out of reach. Investment opportunities pass, retirement gaps widen, exit options shrink. Be patient. Sounds polite. In finance terms, it means negative returns. And when salary women finally leave, exhausted and underpaid, companies shrug and say, "We couldn't retain female talent." No, you just priced them out of the future. This is not about feelings, it's about cash flow. Let's be clear, this is not a gender debate, this is not cultural misunderstanding. This is a capital allocation problem disguised as tradition. Japanese companies allocate capital upward risk, downward time against women wealth, toward those already holding assets, and they call it harmony. If this chapter made you uncomfortable, good. That means you're still awake. Like the video because algorithms understand outrage better than politeness. Subscribe because Chapter 3 explains harassment, silence, and why HR exists to protect balance sheets, not people. Politeness every time. Japanese companies insist they take harassment seriously. They say it in annual reports, ESG briefings, and investor calls, right between governance reforms and sustainable growth. What they don't say is this: harassment is not a bug, it's a cost control feature. Why harassment thrives in polite systems. Harassment doesn't need shouting or violence. In Japan, it prefers ambiguity, plausible deniability. You must have misunderstood. He didn't mean it that way. Let's not escalate things. This environment is perfect for one thing: risk containment. When nothing is explicit, nothing is actionable. When nothing is actionable, nothing is paid. No lawsuits, no settlements, no reputation damage, no stock volatility. From a financial perspective, silence has excellent ROI. HR is not broken, it's doing its job. Here's a reality check that ruins corporate trust exercises. HR exists to minimize legal exposure, protect management, preserve internal stability, prevent incidents from becoming liabilities. HR does not exist to deliver justice. Justice is expensive. When a salarywoman reports harassment, the system activates instantly. Documentation requests neutral language. Both sides framing emotional fatigue, subtle pressure to de-escalate. The goal is not truth, the goal is containment. If the complainant quits quietly, the system has succeeded. The financial logic of victim attrition. Let's do the math companies never show. Replacing a salarywoman costs less than a lawsuit, costs less than public scandal, costs less than executive accountability, costs less than changing management culture. Training new staff is cheap. Paying damages is not. So harassment cases are nudged toward the cheapest outcome. Reassignment silence, mutual misunderstanding, voluntary resignation. Japan didn't design this system to hurt women. It designed it to protect capital. The harm is a side effect, not a concern. Why senior men are untouchable assets. High-ranking male employees are not just people, they are balance sheet items. They bring client relationships, political connections, deal continuity, stock stability, institutional memory. Losing them creates uncertainty. Uncertainty scares investors. So when harassment happens, the question isn't, what's right? It's, what's the least disruptive? And the answer is almost never, hold leadership accountable. The career math for salary women. Every complaint carries hidden costs: reputation damage, promotion delays, project exclusion, quiet labeling as difficult, long-term income loss. So women learn the equation early: speak up, negative expected value, stay silent, slow decay but survivable. This isn't resilience, it's financial coercion. Why this system keeps Japan stable. Investors love predictability. Japan offers low volatility, high internal reserves, strong corporate balance sheets, stable executive control, minimal scandal risk. All of this is supported by invisible labor and invisible suffering. Salary women absorb the instability so the market doesn't have to. Harmony is not cultural, it's financial engineering with human buffers. If this chapter made you angry, don't waste it. Like the video because outrage feeds reach. Subscribe because Chapter 4 explains burnout, exit, and why Japan's talent drain is a balance sheet decision, not a mystery. Japanese companies love to talk about retention. They hold seminars, they print posters, they introduce mindfulness apps nobody has time to open. And yet, salary women keep leaving. This is not a mystery. This is planned attrition. Burnout is not an accident. Burnout doesn't happen because people are weak. It happens because systems are calibrated to extract maximum output right up until collapse. For salarywomen, burnout is engineered through endless responsibility without authority, emotional labor with zero compensation, overtime that never appears on payroll, evaluation criteria that shift just before promotion, constant social pressure to endure quietly. The goal isn't sustainability. The goal is output before exit. Once someone breaks, the system replaces them and keeps going, clean, efficient, cheap. Why losing women is financially convenient. Here's the uncomfortable accounting. When salarywomen quit, no long-term wage growth obligation, no pension accumulation, no leadership pipeline disruption, no restructuring of power, no equity dilution at the top. Turnover is framed as unfortunate. Financially, it's optimal. Japan's companies don't need women to stay forever. They need them to stay long enough. The exit funnel. Nobody admits exists. Salarywomen don't all leave at once. They are funneled. Stage 1, overwork framed as experience. Stage 2, promotion delays framed as timing. Stage 3, harassment or exclusion framed as miscommunication. Stage 4, burnout framed as personal choice. Stage 5, exit framed as lifestyle decision. By the end, the company has clean hands and intact balance sheets. Where do they go? Follow the money. Most salarywomen don't exit into wealth. They exit into contract work, part-time roles, caregiving career resets without capital, permanent income penalties. Meanwhile, executives stay. Capital stays. Assets stay. This is how Japan maintains corporate stability while quietly shrinking its skilled workforce. It's not incompetence, it's selective preservation. Why this creates a talent drain that nobody fixes. Japan constantly asks, why can't we keep talented women? Because keeping them would require paying more, sharing authority, redistributing capital, changing promotion criteria, accepting volatility. Volatility scares markets. Burnout doesn't. So burnout wins. The macro consequence, everyone pretends not to see. Burnout feeds weak consumption, declining household formation, lower birth rates, reduced innovation, aging corporate leadership, asset inflation disconnected from wages. Japan looks stable because the pain is slow, distributed, and silent. Markets love that. If you're still here, you already understand this isn't about motivation posters or leaning in. Like the video if you're tired of being told this is normal. Subscribe because in Chapter 5, we pull the camera back and connect salarywomen's silent struggle to Japan's stock market, real estate bubble logic, and long-term economic decline. By now, the pattern should be obvious. Japan's corporate system does not collapse because it sacrifices people slowly enough to look stable, and at the center of that illusion is the salarywoman. Why the stock market loves silent workers. Japan's stock market performance confuses outsiders. How can stocks rise when wages don't? How can companies post record profits while households struggle? How can balance sheets look so healthy? Simple answer, labor absorbs the shock so capital doesn't have to. Salarywomen provide predictable output, suppressed wage growth, minimal legal risk, low volatility, emotional labor that stabilizes teams. Markets reward predictability, not fairness. Every unpaid hour, every delayed promotion, every silent exit smooths earnings reports and keeps share prices calm. This is why investors love Japan, and why workers don't feel the recovery. Real estate, assets, and the gendered wealth gap. Now look at property. Real estate prices rise not because salaries rise, but because corporations park cash in property, executives already own assets. Foreign capital chases safe markets. Wage growth is suppressed, keeping inflation contained. Salarywomen are locked out twice, low income growth, no asset accumulation. They rent while corporations buy. They save pennies while capital compounds. Japan's real estate stability is built on frozen wages and delayed lives. Why this system can't fix itself. Fixing this would require wage redistribution, equity access, promotion transparency, accountability for harassment, short-term volatility, and volatility terrifies Japan more than decline, so the system chooses stability over growth, silence over reform, optics over outcomes, balance sheets over people. Salary women are not failing Japan. Japan is using them. The long-term cost, nobody can hedge. You can't suppress half your workforce forever without consequences. The bill arrives as talent drain, innovation, stagnation, demographic collapse, weak consumption, asset bubbles detached from reality. A society optimized for yesterday's investors, Japan didn't lose its future in one crisis. It traded it away quietly, quarter by quarter. This is why this story matters. This isn't a gender issue. This is an economic model. The silent struggles of salary women explain why Japan looks rich but feels poor, why markets lie better than people, why reform always comes later, why stability has become decay. And unless this model changes, Japan's corporate ladder will keep spinning, and everyone on it will keep running in place. If you watched this far, you're not here for comfort. Like this video because algorithms reward clarity, not politeness. Subscribe because this channel doesn't sell travel fantasies or corporate fairy tales. It explains where the money goes and who pays for it. Japan calls this harmony. Markets call it stability. Salary women call it exhaustion. And now you know why.